In the world of finance, the only certainty is uncertainty. A profound statement that rings especially true in today's volatile economic climate. It's as if we're navigating a ship through a stormy sea with waves of unpredictability crashing against the hull at every turn. Let's take a moment to consider some of the factors contributing to this unpredictable landscape. First up, we have the risks related to consumer credit. It's like a game of Jenga, each piece representing a loan, a credit card debt, a mortgage. As more and more pieces are pulled from the tower, the structure becomes increasingly unstable, teetering on the brink of collapse. And speaking of instability, let's not forget the unpredictable nature of the Federal Reserve stress tests. These tests, designed to ensure financial institutions have adequate capital to absorb losses and support operations during economic downturns, have become a source of uncertainty themselves. Like a pop quiz you never saw coming, they can send shockwaves through the financial sector, causing even the most steadfast institutions to wobble. Adding to the storm is the uncertain economic environment. Picture trying to plot a course through uncharted waters with no map or compass to guide you. That's what it's like for businesses trying to navigate today's economy. With fluctuating markets, geopolitical tensions, and technological disruptions, it's a constant battle to stay afloat. And then there's the delinquency rate and net charge-offs. Think of these as holes in our ship. The higher the delinquency rate and net charge-offs, the more water our ship takes on, leading to rising provisions for credit losses. As we weather this storm, it's clear that the economic climate is fraught with challenges. Yet even in the most tumultuous seas, seasoned sailors can find a way to ride the waves. So, in the face of these challenges, one has to wonder, is there a silver lining in the cloud? Let's gaze upon the financial landscape through the lens of Capital One. Amid the ebb and flow of the current economic climate, Capital One finds itself in an interesting position. Trading at an attractive valuation, it's a shining beacon in a stormy sea of financial uncertainty. But it's not all smooth sailing. Capital One is navigating through choppy waters of risks related to consumer credit, Federal Reserve stress tests, and an unpredictable economic environment. The delinquency rate and net charge-offs have increased, leading to an uptick in provisions for credit losses. Regulatory constraints on capital returns loom like a storm cloud on the horizon. Adding to the complexity is the macroeconomic environment, with high inflation and unpredictable Federal Reserve policy tightening, sending waves through the financial market. But let's not forget, every cloud has a silver lining. Elevated interest rates have widened net interest margins, sparking a surge in revenue growth. It's almost like a lighthouse, guiding the way through the fog of financial uncertainty. Capital One has managed to keep its ship steady, maintaining a strong balance sheet and solid liquidity reserves. It's like a well-stocked ship ready to weather any storm. The stock might be undervalued, but caution is the watchword here. It's a delicate balance, like walking the plank on a ship in stormy seas. The current valuation compensates for risks, but clarity is the compass we need to navigate these waters. So as we stand on the deck, scanning the horizon, the question remains, is it the right time to invest in Capital One? While traditional finance grapples with uncertainty, the world of blockchain and cryptocurrencies is booming. A testament to this is the success of blockchain data platform Chainalysis. Recently, they raised a whopping $100 million in their latest funding round, catapulting their valuation to a staggering $4.2 billion. This funding will be used to further develop their software and add more cryptocurrencies to their data coverage. As cryptocurrencies continue to be embraced worldwide, regulatory scrutiny is intensifying. This, in turn, is driving a surge in demand for blockchain data firms like Chainalysis. With this increased acceptance and regulatory focus, the blockchain and cryptocurrency sector is thriving, even amidst the unpredictability of the broader economic environment. The rise of blockchain and cryptocurrencies could be the game changer in this uncertain financial climate. So, what does all this mean for investors? Well, it's a bit like navigating a ship through a storm. The weather is unpredictable, but the potential rewards for reaching the other side can be great. The current economic climate, with its high inflation and unpredictable Federal Reserve policies, presents both risks and opportunities. Companies like Capital One, despite facing challenges such as increased delinquency rates and regulatory constraints, are showing resilience. Their strong balance sheets and solid liquidity reserves can be a beacon of stability for investors navigating these choppy waters. Then we have the burgeoning world of blockchain and cryptocurrencies. With companies like Chainalysis expanding their operations and cryptocurrencies gaining more global acceptance, the potential for profit is clear. But with increased regulatory scrutiny, investing in this space requires a diligent approach. And let's not forget the proposed increase in capital gains taxes. This could affect high-growth sectors, but it could also make dividend-paying stocks more attractive. It's a shift in the landscape, a new challenge to navigate. In essence, the key to weathering this storm is caution and diligence. It's about carefully analyzing the risks and potential returns of each investment. It's about being brave, but also being wise. In the world of finance, the brave may not always live forever, but the cautious do not live at all. So let's set sail, shall we?